What to do if I owe the IRS. Understanding your options will help you determine what to do if you owe the IRS. That way you can come up with a plan. Here are some of the most common options for people who owe and can't pay. 1. Set up an installment agreement with the IRS. Taxpayers can set up IRS payment plans, called installment agreements. The type of agreement you can get depends on your situation, including how much you owe and how soon you can pay the balance. You shouldn't set up an installment agreement if you can pay the balance within 120 days. See option number 2 later. Fees or cost. For online payment agreements, the application fee is $149, or $31 if payments are made electronically. The fee is $43 for low-income taxpayers. To apply for low-income application fee, submit Form 13844. Action required. Complete an online payment agreement or Form 9465. You won't need to submit a financial statement for installment agreements of $50,000 or less. You can also get a tax expert to evaluate your situation and identify your best solution. Advantages or disadvantages. If you set up an installment agreement, the penalty on your unpaid balance reduces to 0.25% per month, until you pay the full balance on schedule. Interest is charged at the short-term federal rate plus 3%. Interest may change each quarter. Generally, the IRS can void agreements if you don't pay on schedule. Forms needed. Form 433A or Form 433F is required if the balance is more than $50,000. You can pay through payroll deductions with Form 2159, Payroll Deduction Agreement. 2. Request a short-term extension to pay the full balance. The IRS will provide up to 120 days to taxpayers to pay their full tax balance. Fees or costs. There's no fee to request the extension. There is a penalty of 0.5% per month on the unpaid balance. Action required. Complete an online payment agreement, call the IRS at 1-800-829-1040 or get an IRS agent to handle it for you. Advantages or disadvantages. This option is convenient for taxpayers who need a short time to pay their full tax bill. The IRS will charge interest at the short-term federal rate plus 3%. Interest may change each quarter. With short-term extensions, you avoid the installment payment application fee, but not late payment penalties and interest. 3. Apply for a hardship extension to pay taxes. The IRS offers options for people in hardship situations, including currently not collectible status and the offer in compromise. For an extension based on hardship, you'll qualify only if you can prove that paying the tax you owe would cause financial hardship, based on IRS financial standards. Fees or costs. There's no cost to apply for a hardship extension. There are no penalties, but interest is calculated at the short-term federal rate plus 3%. Interest may change each quarter. Action required. File IRS Form 1127, Application for Extension of Time for Payment of Tax Due to Undue Hardship. You must include a statement of your assets and liabilities. 4. Get a personal loan. You could ask a personal contact like a friend or family member to loan you the money. Fees and cost will vary widely depending on the source. This could be an inexpensive option, but you should use your best judgment. 5. Borrow from your 401k. If your 401k plan allows for this type of loan, you are generally limited to 50%, with a $50,000 maximum, and you must repay the money within 5 years. Fee or costs. There is a possible minimal fee. The plan must also charge interest. Action required. Check with your plan administrator for details. Advantages or disadvantages. If it's allowed, a loan from your 401k plan can be a ready and inexpensive source of cash to pay the current or back taxes you owe. However, taking a loan could negatively impact your future retirement savings if you don't repay it. The loan is treated as a taxable distribution if you don't make timely payments, leave your company without repaying the loan, or your plan terminates. Also, if you are not yet age 59 or half, A taxable distribution is subject to the 10% early distribution penalty. 6. Use a debit/credit card. Various service providers are available for this option. Fees or costs. Fees varies, generally about $2.49 to $3.95 with a debit card or 1.87% to 2.35% of the tax balance due with a credit card. Action required. Check with the IRS for a list of service providers. Advantages or disadvantages. This type of payment is convenient and gives taxpayers greater control and flexibility for making payments. They may also earn points, miles, or other credit card rewards. However, higher credit card balances could negatively impact your credit score, and paying with credit may not be appropriate for people with unmanageable credit card debt. If you owe the IRS and not sure what to do? If you have any back taxes that need to be resolved but just not sure where to get started? Then get your free tax debt consultation with professional tax experts that can help you put together a strategic plan on how to greatly lower your tax bill as well as create a more than affordable payment plan for you. Simply call 1-888-476-3240 today to see how to customize your payment plan.